We all know what's going on in the economy. Financing has become very, very strict. We know a couple years ago all you had to do was fog a mirror and you could get a loan for as much as you possibly needed to go buy a house that you couldn't afford the payments on. But nowadays, the situation is reversed. Banks are being overly cautious, and you have to almost be able to walk on water to get a loan. So that's a very, very common question is how do I pay for it right now? Now with real estate, once again, depending on the way that you're investing, that's going to determine the way that you're acquiring your properties. How are you financing those properties? Are you buying a dilapidated foreclosure? Maybe you're doing that with a hard money loan where it's money that's used for a short period of time while you fix the property up, and then when you're done fixing it up, you sell the property and you close out that hard money loan. Maybe you want to buy long-term rental properties. You know, with that you can get a conventional mortgage. There's Fannie Mae rules and restrictions on how many mortgages you can have in your own name, and they're constantly changing. It used to be you could have 10, then middle of last year they dropped it to 4. Now they've raised it back up to 10, but they put extra restrictions on that. So you've got to, once again, meet certain requirements that you didn't have to worry about a couple years ago. And then there's an entire mortgage industry that the mortgages are not backed by Fannie Mae or Freddie Mac, and those are non-conventional or non-conforming loans, and they are much less stringent. The qualifications to get those types of loans are less, and that may be an avenue that you have to go down.